What a glorious day. Markets are down big. The Nikkei index hit a high, 42,400 back on July 11th. It is now around 31,000, a fall of over 20% in a matter of 3 weeks. Bitcoin on Thursday was at 65,000. It is now 50,000. For those who believe that Bitcoin was a place to go to for safety and security, I ask you one question. Where the fuck is it? Where is the safety and security? They criticize gold. Gold is down only 3% since Thursday. Unbelievable, guys. As we've said many times in many videos, the stocks that lead the gain will lead the losses. The most overhyped stocks will absolutely fall the most. NVIDIA is now down to $97 from an all-time high of $140. Let's go check it out right now. The markets haven't opened yet, but we have pre-market stuff out there. All-time high, June 20th, $141, $140.76. Mo, it is currently, I believe, pre-market at 95, 96 bucks. What is it at? If you can find that for us. Here. Guys, remember, we don't know what's going to happen. The market's still up this year. This could be a short-term aberration. No one has a clue where we're going. I've thought before, this is the start of something. We almost got to the point of buying back after the COVID crash. So we're now 4 years in to a massive bull market. Ironically, the yield curve has gone back to the positive, the 2 versus 10 year. But that could be for one reason and one reason only. There's so much volatility right now in the short run, so much fear that people are paying more for short-term interest. What's NVIDIA?
So it's $94.
94.
But I also want to comment on the gold versus Bitcoin.
Yeah.
Bitcoin is down 14% right now. Gold is down 2%.
Yeah.
So it's a big number.
Guys, Bitcoin is a speculative technology play. Actually. That's it. That is absolutely it. Absolutely it.
This is interesting.
Guys, valuations in the long run are what matters. We're the channel that gets excited for today. Last night, I was looking at futures going, oh my God, this could be a fun day. I woke up this morning, saw the NASDAQ was down huge. The Nikkei had already been halted. What were you going to say, Mo?
Last 4 days on Bitcoin, down 5.93%, down 1.22%, down 4.17%, then today down 14.22%.
It's a speculative play.
Gold in those 4 days, up 1.55%, down 0.12%, down 0.10%, down 2.02%.
Yeah, so guys, a lot of justifiable criticisms would be, Paul's been saying the market's been overpriced for a while. Absolutely, I've been saying that. Now, the response is, I don't know when things are going to turn around. I don't know when things, but remember, when valuations matter, they matter with a vengeance. I just saw today, what were people saying? Oh, everybody's worried about AI's valuations. Guys, what did we say about rates, interest rates? When people kept saying, we can't wait for lower rates, I said, what would cause lower rates? It would be a weakening economy. All of a sudden, the SAM rules triggered, and people are worried about this. Warren Buffett sells half his Apple. People are worried. Guys, if you believe in the, and by the way, Apple just reported record revenue, record profit. I'm looking at going, what is going on here? We're the channel to go to when things, guys, if this is the start of a long bear market, it's probably not going to be great. Doesn't mean you can't make money in it. You absolutely can, and you will if you have the right process. Don't let the recent price movements make you feel smarter or dumber than you actually are. The process is what drives the right results in the long run. When I look at the people out there and what they're doing, the type of people that are doing well in investing, I just laugh. Mm-hmm. What's Palantir doing, by the way, pre-market?
That's a great question.
Another hype stock. Another hype stock.
Oh, damn.
What's it down?
This thing is 21.75.
What's it down percentage-wise?
Let's see. So close the day.
What's pre-market?
21.75. Current closed the day last week at 24.75.
Okay, so that's about 12 or 13%, maybe
and
more.
And they report tonight, Tim? Yeah, they report
tonight.
They report tonight.
Guys, I'm on Twitter, and I'm very active. I've been very active the last 24, 48 hours. This is a poll I put just 11 hours ago. Do you think this is the start of a long bear market, or is this a healthy pullback before new all-time highs? Long bear market, 40%. New all-time high, 60%. We did the same poll on our 24/7 channel and on this channel, and it was pretty similar. 62, 63% said pullback before new highs. Guys, I have no idea where it's going, but what I do know is valuations are still high. And in the long run, valuation matters. The next 5 or 10 years are not going to match the last 5 or 10 years in all likelihood. Could there be a way it does? Sure. With immense inflation really driving up nominal GDP, revenue, and profit for these companies. That's how we have a normal next 5 or 10 years. You have to ask yourself, what's more important to you? Because people will complain if inflation's high, but that's how we get out of this mess to begin with. This is exciting for us, but we have no idea what's going to happen. Look what happened after Black Monday back in 1987. Stocks went right back up from there. But look where valuations were back then. Mo, go ahead.
I just pulled up this article on CNBC. Japan logs worst day since 1987 Black Monday crash.
So I'm reading a lot of different things, but go ahead.
So they had a 12.4 loss today, and they erased all of their gains from this year, moving into a loss position.
Wow.
So that's 7.
And keep in mind, the S&P and the NASDAQ are still in positive territory for the year. So is the Dow. The Dow is down quadruple digits. So is the NASDAQ. Guys, when was the last time that happened? The market opens here in 8 minutes or so, 8.5 minutes. Guys, we love these kind of days. And I hope we have 30 more of these before the end of the year. You might sit there and say, Paul, you're a sociopath for thinking that way. I apologize. But I truly love red days. If you're an investor, you should love red days.
Do you want to hear something crazy?
Yeah.
Talking about the VIX index. So this is the volatility.
Oh,
index.
volatility's up over 100%.
So, but listen to this. So I just went back to COVID. This was February and March of 2020. The highest jump in one day was 42%. It's up 135% right now.
Yeah.
In one day. I'm going back here. This is 18. Let's see. Yeah, 117% in 18. That was quite the jump. Then it came right back down. I wonder if I can go back to 08. Come on, give me some 08 data. There we go. Oh, yeah, we didn't even have close to that much. Biggest jump in 08, 20-some%.
Guys, we have almost 1,000 people watching us live right now. There's a point for that. We've always said we will be the voice of reason and calm when things get scary. I don't think, if this is the start of a bear market, it's only going to get uglier. But remember, that's a good thing for you investors out there. If you loved NVIDIA at 140, why are you not backing the Brinks truck up and buying more of it right now? It was at 140 on June 20th. Siri, how many days ago was June 20th? 46 days ago. 46 days ago, it's down over 30%. You should love this. My personal opinion is it's hard to justify NVIDIA even at $94 per share. But again, you're going to have companies that are definitely worth it that are going to fall. Pretty much every company is going to fall in a bad bear market. That's going to happen. But we don't know where this is going today. This could end very quickly. But what's happened over the weekend? Iran was warning people they're going to attack Israel. We had the Nikkei fall big time. Warren Buffett sold half his stocks. The SAM rule was triggered. People were thinking recession. Guys, I thought recession was a good thing because it meant lower rates. That is our point. Don't get me wrong. I understand. We've been talking about these things for a while now, but you never saw me ever sitting there saying in the last year or two saying that what's going to happen in a short-term period. I have no idea what's going to happen. You don't either. Nobody out there does. But they're talking about emergency Fed cut rates. Yeah. Jeremy Siegel, the ultra biggest perma bull of all time, is calling for 75 basis point emergency cut. What would have to happen to have an emergency Fed cut rate?
So I'm reading it right here. He said that they need to have a 75 basis point cut. The Fed funds rate right now should be between 3.5% and 4%. What is pre-market? We're down 4.88% on the NASDAQ and 3.5% on the S&P, and we're already talking about rate cuts, emergency rate cut. Like, what the hell is going on?
Guys,
we can't just let markets do what they do.
That's the thing. It's okay to let markets do what they do because as Morgan Housel says, Tim, relax. As Morgan Housel says, every past bear market and crash looks like an opportunity. Every future one looks like a risk. This is no different than the last ones.
And you know why this nonsense happens where you have these big days? Because of all the crap that they've done, like emergency rate cuts. Over the year. Like, what are you doing? You're just making it worse.
To me, that's like saying I need an emergency credit card open in order to pay my bills. It's like, that's still not a good thing. That's still not a good thing. Now, guys, if you want more safety and security and to feel better and have a better process, everythingmoney.com/sign up. We have our community. We have our software. I was just in the community this morning. Mo, did you see all the comments? This is awesome. Red days. This is what we wait for. That's the kind of mentality I want everybody to have. So go sign up. We had limited spots. You guys, we are making changes because as time has gone on, We have four everything money channels right now. And our goal is to have the community of software be geared towards each channel individually. So we are not going to offer everything in every channel, but that's going to change soon. After that happens, you'll have to buy everything individually. So if you want all the software, all the tools, everything we offer now and in the future, go sign up now. We have a 7-day trial, everythingmoney.com/sign up. You'll be happy you did. We had an amazing morning of signups, probably because of all this volatility. But like I said, guys, I really gotta say this. I posted this today on Twitter. Look at my comment about Bitcoin, and I really do mean this. The Bitcoin hypesters always said you go to Bitcoin for safety and security when things are bad. Fiat currency is dead, gold is dead. Since Thursday, Iran has threatened to attack Israel. The SAM rule was triggered, and Asian markets have plummeted. Bitcoin has gone from 65,000 to 51,000, down 21%. Gold has gone from 2,500 to 2,425, down 3%. Bitcoin is a pure technology speculative play. It is not a store of value. It's not a place where people go for safety. Guys, if you sit there and say that this is a place for safety, when things are most concerning, that's when the safety should occur. And the safety is not occurring here. It fell below 50,000. Is it still up a ton? Absolutely. But this is if this is a bear market, you're going to see a big drop in Bitcoin. It's a purely speculative play. As we've said, look at the most overpriced stocks. I said yesterday on Twitter, look what I did yesterday on Twitter about Amazon. I was floored when somebody told me this. Somebody messaged me and said, Paul, have you noticed that Amazon is flat for the last 4 years? I go, come on, there's no way. Sure enough. Let's go to our software. I'll show you. Look at this. Amazon. What time is, we go? Market's open in a few minutes.
3 minutes.
Pre-market. What's Amazon at pre-market right now? Mo.
Come on.
End date. Boom.
Amazon is down 7.78% now, $154.59.
Wow. So
$154.59.
the last time it was at 154 back in August of 2020. It is flat for 4 years. In that time, Amazon's revenue is up 55%. Amazon's profits up 105%.
NVIDIA is 93.
93. The most speculative companies will fall the hardest.
What Tesla's doing?
Tesla's down to 193, I saw. What's it at?
186.
186 now?
Down 10.5%.
Boy. Guys, if you love Tesla at 415, what are you doing here? If you loved NVIDIA at 140, what are you doing here? If you did love them at those prices, you probably made unrealistic expectations for the company or didn't understand price versus value. That's what's most important. Guys, you got to remember, we're here to teach a process, and that process in short run can look absolutely stupid. But if it makes sense to you, in the long run, you'll do quite well. It's not just a way of thinking about certain investments. It's a way about thinking about life in general. Having a margin of safety is a great way to live your life. You wear your seatbelts for a reason, margin of safety. What are the chances of you getting a car accident in any given car ride? But you wear a seatbelt. Why? Because it's a simple thing to do, and it could save your life by an overwhelming number. What's up, Mo?
Intel's down another 5.3%.
Yeah. So I was looking at Intel. Guys, let's talk about Intel.
Let me look at the last couple of days here.
Guys, I'm a big believer in the tin can theory, and I look at Intel. This is a company that I started buying again, sub 35. It's down a lot. This is a pure turnaround play, and when you look at the numbers, if you run it in our stock analyzer tool on Intel, the numbers with very reasonable assumptions, unless you think Intel is going to zero, which it very well could be, you got to sit there and take a hard look at it. Intel does have some issues. Don't get me wrong. There's a lot of issues, but they're in a $10 billion cost-cutting metric, and if they do hit that $10 billion, they're currently at $91 billion market cap. If they save $10 billion, that's a 9-to-1 free cash flow ratio. Go ahead, Mo. What else you got?
They were down 5.5% Thursday, 26% on Friday, and then another 5.5% today.
Well, it's not even open yet. It's pre-market, right?
Yeah.
How many more seconds? We have like seconds before the market
20
opens.
seconds.
20 seconds for the market opens?
Let's see.
This is awesome. So guys, this is our live stream. We love it.
Let's see. NASDAQ futures down 4.92%. S&P futures down.
Oh, so
3.58.
guys,
Let's see, market's
NASDAQ
open.
futures were down 6% at one point.
Market's open now.
Market's open now.
Let's see where
Okay,
things go.
let's go. I feel like it's
NASDAQ's down 2.4.
no, that hasn't been updated yet.
Are you sure?
Yeah, that hasn't been updated yet. That was what it finished at the other day.
I'm on 2.43. Let's see. There must be a data feed issue because I'm on Yahoo Finance. Checking it.
5.5% right now.
Wow. There you go.
So guys, I believe
happens today.
7% is the trigger mark. 7% is the trigger mark. And
I'm surprised there's not stories about it on anywhere right now.
What do you mean?
About like what triggers a halt in the market.
So I read this morning, when I woke up, I read this morning that it almost triggered at 6.5%. But then I was looking at the chart going, I don't see 6.5% in the NASDAQ at all. What's up, Dalton? Dalton's in town. He picked a great week to come in. Dalton's the cause of all this. If you all want to blame somebody for your, remember guys, if you have a long-term outlook to say, for example, if you're 10 or more years away from retirement, you should love a day like today. You should hope we have 20 more of these because you want to put more money in at lower prices. This is what's key. Guys, Tim said this morning, it's like Christmas Day. He also said it's like game one of a 7-game series in the World Series. I agree with that. I was excited. I want you to have that same excitement when you see red. I don't want you to have that fear. That fear is not going to do anything for you. It's only going to cause you to make bad decisions. Everyone has the brain power to buy stocks. Who has the stomach? Who has the stomach to buy stocks? That's the hard part. You've got to remember that. And I just look at this as potentially a huge opportunity in the future for, you know, let me pull up our, let's see if this is updated yet.
Oh my God.
What are you saying? Oh my God, to?
Goolsbee, Chicago Fed president, said, basically he was just talking about the economy and stuff. And he said, if there's deterioration to those parts, the parts that he was saying, we're going to fix it.
Okay.
The Fed's going to fix it. Cool. That's just what we
want. The Fed's role is not to fix things like this.
That's exactly what we want. Is just
the Fed's role is not to fix things like this.
This has just become so far like gone in the media.
Yeah, I mean, this is the age of social media. It's the age of, you know, we have things happening all the time very quickly. Remember, the same way that drives the pendulum up one way, it'll drive the pendulum the other way. That's the big key I want you to remember here. The pendulum doesn't swing one way and then go back to the center. It has to swing the other way. We have to learn those different ways. That's really, really key here. I love red days, and there'll be a time when people are giving up on stocks and I'm buying stocks and they continue to go down. That's where you're going to make your money. That's where you're going to build wealth. From 1966 to 1982, the NASDAQ went from 110 to 107. But from 1982 to 2000, it went from 107 up to 1550. So 17 years went nowhere. 17 years went up 15 times. The people who bought when it went nowhere, when it felt like stocks could go nowhere. In fact, Barron's magazine in June or July, I think, or maybe August of 82, their front cover said the death of equities. People who bought then would have been rewarded handsomely. That's what's key here. You don't know where the market's going to go in any given day. Mr. Market is just telling you every day, I feel good or I feel bad. Your job is to decide are you a buyer or a seller. That's your job. It's a hard job to do, especially when things are so volatile. Guys, when COVID happened and the market fell 40% in 1 month, we didn't even know the world was going to be open. When the great financial crisis occurred, people didn't even know they could get money out of their bank accounts. They didn't know they were going to be able to keep their houses. Those things occurred. If Iran attacks Israel, I don't know what's going to happen. I do know one thing though. Whatever happens, we will get through it. That's what happens with the world. The world gets better. If we keep backstopping everything, it's going to be hard to really learn our lessons. And I understand when people sit there and criticize, like, oh, it's been so long. Yeah, but we've also put so much money in the economy. I mean, our debt is going up by $1 trillion every 6 months. That's an incredible feat. What?
Just looking at what's going on in these markets. It's just the opinions that come out are crazy during these times.
Now remember,
they're funny.
If you're a dollar cost average person into low cost ETFs, don't stop.
Yeah, don't.
You cannot stop. I don't care if the market goes down 70%. You cannot stop. Yes, you will feel poorer because you see your stocks going down, but you're putting money at lower prices and you're going to make that money back way more. Absolutely. It's going to be awesome for you. This is the big key here. I cannot stress this enough. We were so excited to do a live stream today to sit there and show everybody what we mean by all this. These are the things that we've been talking about that you have to get ready for. And guys, if we have a bear market coming, this is going to be one of the easy days.
Oh, yeah.
This is going to be one, and I don't mean it to put fear. I just sit there and say, guys, this is the reality of it. Now, the good news is, like I said, we have our community. We have these tools that makes you a better investor. I learned my biggest lessons by the mistakes I made. You can either look at them and fear them, or you can look at them and say, hey, I learned my lessons from this. That's what's really, really important here. I want you to take these opportunities to learn this. Guys, every investment is the present value of all future cash flow. The less you pay, the more money you make. The more you pay, the less money you make. And guess what? There'll be some great companies that profit goes down. You might sit there and say, well, the fundamentals changed. No, just because profit went down cyclically does not mean the fundamentals changed. There will be companies that profit and revenue go down because the cycles happen. And if there's a recession, that will happen. Guys, by the way, the U.S. unemployment rate is 4.3%. That's very low historically. Now, over the last year, we had 3.6%. I can understand why people say this is a lot. But the Fed wants 5 to 6%. That's full unemployment. That means that we can really get good workers in this market. For everybody out there watching, you probably know these idiot workers that you work with, and you go, why do these people have a job? Well, that's what happens at 3.5% and 4% unemployment. Idiots get jobs. Now, if you lose your job, you might lose your job even though you're not an idiot. You might lose your job just because your company starts to suffer. That sucks. I'm not trying to diminish that. What I'm trying to say is there'll be an opportunity for you to get better. It'll be hard in the moment, just like it's hard when you see stocks down a lot to be able to understand that, but it does happen. That's what's incredible. Can somebody mute me for a second and Mo? That's more than a smidge. No, it's okay. So guys, Warren Buffett selling half his Apple. I don't know why he sold half his Apple. What's Mo looking at now?
Yahoo's down too.
Yahoo's down? There must be an overload in the system here.
Yeah. Because everybody's probably panicking because they think their retirement is gone and their life is over.
Wow.
Right? Right?
Mo, why do you have to be so dramatic?
I'm just trying to be a media person.
Listen, I get that, but I look at this saying, this is the great learning opportunity for everybody out there.
Well, that's what I'm saying. That's probably why people are checking.
Then follow up with that.
I don't need to. My dad texted me this morning at 5:45.
Yeah.
And he goes, speaking of Trump.
God damn it.
He goes, 5:45 this morning. He texted me. He's like, should we just sell all of our stocks?
He did not say that.
I'm like, what are you talking about? He's like, the market's down like X%. I'm like, wait, what? We need to sell everything because we're down 5% or 6%? Like, what's going on here? But he's like, can you log into all the accounts and this and that? It's all the people logging in.
Yeah, I mean, that's only going to, I doubt people are logging in to buy more.
No, they're logging in to see how much they're losing and see if they can go out to dinner this weekend.
The NASDAQ was at 18. What's the high of the NASDAQ? 18,260 or 18,600? I don't know what the high is.
I'd tell you if I could see it.
Yeah, but now it's at below 16,000. Guys, and the bottom of November of 2022 was the bottom of that 2022 bear market, that adorable bear market. The NASDAQ was like 10,000. It soared like 80-some%. Unbelievable.
Yeah. Let's see.
Yeah, a lot of people can't do it. We have over 2,000 people on this live stream right now. This is the biggest live stream I've ever had.
All right, Max.
Unbelievable. Guys, this is what this channel was made for. Unfortunately, it can be boring to buy good companies at good prices, but it's way better than buying companies that are full of hype. And yes, NVIDIA is up still a ton. Don't get me wrong here, but oh my God, it's not even updating it. This is incredible.
18,671 was the high on.
Okay. And we're at below 16,000 now.
Yes.
That's over a 20%. No, not a 20% drop. I apologize. It's not. It's a 15% drop. give or take. We hit a correction in the NASDAQ on Friday, correct? We were at like literally 10.2% down, which is technically a correction. And guys, corrections happen all the time. This could be a correction. This could very well be a correction. But I asked you the question, do you want to be the person that was scared? Now still, even though this could be a correction, we still want you learning a process to buy good companies at good prices. That's what's really important. And dollar cost average and low cost ETFs. If you dollar cost average and low cost ETFs every single month, you don't have to worry about where the market is. You just know that every month you're going to buy and you're going to do it. Doesn't mean you don't stop learning about investing, because it's still a good mental framework to have when you sit there and think about margin of safety in your life, in everything you do. I mean, you can apply this to literally everything you do, right, Mo?
Yeah, absolutely. It's just
friendships. It's just a way of thinking.
Exactly. It's just a way of life.
Yeah.
Emotions, etc.
I am surprised by the Nikkei, down 20% since July 11th. Is it 25?
It's 25%.
It is. Might be 25, yeah.
Yikes.
Guys, Bitcoin. Let's talk about Bitcoin, because I get it. Bitcoin is still up a ton. I would absolutely be saying that 100%. I'm not denying that. But when I hear the Bitcoin hypesters, and by the way, when I'm on Twitter and I see the people defending Bitcoin and I look at their profiles, I just LOL really hard. I just look at this saying, they talked about Bitcoin being a place to go for safety. This is where they need the safety right now. You don't even need safety right now. When I see people say we're at extreme fear right now, it's like, this isn't fear. It's temporary fear. It's not a long-term fear. Long-term fear is literally people going, you don't buy stocks because you can't make money in stocks. Right. That's not happening right now. Right. That's not at all happening.
One day.
Oh, look at this guy. I'm up 100%, not a store of value, my ass. So he is taking the speculative asset value price and justifying everything he has in it. Okay. Maybe he's right. Maybe. Except the fact is, if it's a store of value, where's the value today? Where's the store there?
It's true.
I don't get that.
It's true.
It doesn't even make sense to me. Man, oh man. It is exciting. I love Twitter polls, by the way, guys. You guys got to follow me on Twitter, @EMPaulG. I love doing Twitter polls. They're like literally the most fun I have right here, @EMPaulG. I've only been on for 2 years and I have 4,400 posts. I'm very active. I think it's a great place to engage and share ideas. Of course, it's also a great place for, idiots to comment, but I like having great conversations about these things. Even my posts about Bitcoin, I'm just sitting there saying, listen, this is the way I look at it. And it's not a flight to safety. If it was a flight to safety, what are we doing here?
NASDAQ's down 4.5%.
Oh, that's it?
S&P is down 3.65%.
So Mo said something as a joke today. He said, watch the markets end up today. Even if markets end up today, to me, it's an indication of where we are. To go from down 6% to up, if that were to happen, would you feel warm and fuzzy about that? That's like being at the hospital and you went from flatlining and they're having to revive you to alive. You wouldn't be like, oh, things are great. You'd be like, no, I still almost died. I'm not saying a 6% drop is death, but do you see my point here? It's like, it's still not a good thing out there. That's not healthy.
The VIX is now up 98%, not 135.
Yeah, it was up. I mean, the VIX, guys, the volatility index. Yeah. That's, by the way, that's why the yield curve, the 2 and 10-year yield curve has inverted. It went positive today for the first time since July of 2022.
Oh, did it?
Yeah.
Nice.
Slightly.
Okay. But it happened.
But the reason being is, if we did hit this recession, then the short run is more risky than the long. You know what I mean?
Yeah.
Then the long run is more. Maybe I got that wrong. I don't know. It's unbelievable.
Either way, it finally changed.
Yeah. Is it still inverted, Dalton? Dalton will look right now.
Can't log into Fidelity. Can't log into Schwab. That's what I've seen.
Unbelievable.
Yeah.
I can't even pay attention to our comments in here. Jeez, oh, Pete.
Except 135. That's incredible. And I went back to look at 2008. I went back to look at COVID. I went to look at 2018. Never was it 135%.
Never.
Uninverted for the first time since July of 2022.
Yeah. So I said in a video recently, inaccurately, I said 500 some days. It's over 7. It was 750 days.
Still on 3.68 versus 3.67.
So 3.68 versus 3.67. It's barely back over. But hey, listen, the streak ended. That wasn't the longest ever, though. The longest inversion ever, I think, was like 900 some days? I'm just going purely off memory, so I don't know if I'm right or not on this one.
I thought it was the longest ever. This current
Was it?
one. I thought so.
I don't think so. Maybe it was. But the SAM rule, guys, the SAM rule, people are talking about, what would you say? What'd you find out, Dalton? Give him a microphone.
624 days in 1978.
How many?
620.
Well, this is longer then.
Yeah, so it must have been longer.
Oh, wow. Maybe it was the longest.
This is funny.
What's so funny?
I'm just reading. Schwab is down. This is down. Vanguard's down. The one guy goes, Robinhood works.
Does it work?
Of course it works.
Is it really working?
Yeah, I guess.
Go
That's
Robinhood.
funny. Oh, somebody said Schwab is working again. That's good. That's so funny.
I don't know. Listen, I'm going to repeat till I'm blue in the face. I have no idea where things are going. You don't have any clue. Nobody has a clue. But the fact that Jeremy Siegel and all these people are talking for an emergency rate cut. Guys, every time we've had bad financial calamities, we've come out better. We have to learn some lessons. We can't have a 5% drop day be, okay, we got to figure it. It's like, come on, we're trying to be a society here. What's so funny, Mo?
This person wrote, I don't understand. Zoom out on the S&P 500 over the last 5 years. Where's the dip?
Yeah,
It's true.
it's true. And by the way, all the more reason not to, because guess what? In that 5-year chart, the NASDAQ, the S&P fell 40% in 1 month. And the world felt like it was never going to open up again. We had no idea. We had this deadly virus supposedly in China that very few people had, but yet it was going to infect the world and kill people and everything. And it did. And guess what? We came out better. We came out stronger. Yes, we had inflation. It's easy to react. I don't want you guys to be reactionary. I want you to realize that the more you do consistently, the better you'll do. The less movements you make in investing, the better you'll do. By the way, that Fidelity research project, I've read that that's not real. No.
What is it?
So research it, because I'm reading. So the research, they said there was a study done by Fidelity, but when you try to actually look at the study, I can't find it anywhere. And some people have said, I don't think the study is real, where they were looking for the best performing accounts. And the ones that did the best were the ones where the people lost their login and passwords because they didn't log in, because they did less. They moved. Yeah. And look at that saying, investing, like actually a lot of things, the less you
touch it, the better it's going to be.
look at golf, Mo.
Mm-hmm.
Do you want a swing with a lot of movement in it or
Yes.
something? Correct.
As little movement as possible.
In basketball, Ray Allen talks about how his shot was just so clean and
Automatic.
quick, boom, automatic. The less involved, the better it is. Less likely things will go wrong. That's the way I want you to be. Now, if you want to pick individual stocks, I love it. But you got to learn a process that works for you. You apply a value framework to your own investment process. Dalton and I have very different processes, very different companies that we invest in, but our process is very similar. It's still about buying a dollar for less than a dollar. Growth investing and value investing are the same thing. You just value that future growth company at a higher price. You still want to buy it for less, though. That's what's key there.
NVIDIA is up to $99.
Oh, it's back up to 99?
Yes.
Wow.
Paul, you want to look at your stock market's GDP ratio?
Yeah, let's look it up right now. So, Mo, why don't you talk a little bit why I set that up?
Okay, I'm just going through the indices. So the NASDAQ is now down 3.5%, and the SPX, I'm going to look at the S&P 500, that is down 3.25%. So let's see what other, I want to go and look at some of these FANGs, because didn't they say that these, what are they called? Magnificent Seven? They lost $1 trillion, and it changes every week. So,
Yep.
Okay, Meta's down 4.5%. Oh, Apple was down 10% at one point or something like that. It is now down 4.75%. Google, everything's coming right back. Wow. Down under 3% on Google. Tesla,
Good.
5.3%.
Wow, that's not bad.
So things are coming back. We'll see. But it's just the irrationality of what's going on out there.
Oh, you found
Talk
it from?
about it. Oh, you don't have a mic, do you?
You found it? Yeah, give him. He has the mic, right? Can he hear? Can people hear him from there?
I'm going to see what great stories are coming out.
Just leave it.
What's the S&P 500 at right this very second?
Hold on.
Okay, is it picking me up now?
So
it says that
5178.78. It's moving very quickly.
Okay, what was that, Dalton?
from 2003 to 2013, Fidelity found, doing an internal study, that the best performing accounts were investors who were dead.
This is from Fidelity.com.
It's from a study.
Nope, I want to see Fidelity. Find me the Fidelity.com. Like, I want to see it say, this is Fidelity saying that. I want to find that because I've seen a lot of things. Guys, this is the S&P stock market to GDP ratio. 5178.78, or 92.4% overvalued. Fair value around 2691. 2691. The stock market to GDP, the 10-year cyclically adjusted PE ratio is down to 33. But the historical averages, that's what's crazy. We're so overpriced right now. What does it mean about the future? The next 5 or 10 years aren't going to be as good as the last 5 or 10 years. But I can assure you that if the markets fell in half today, you're going to wake up 20 years from now wishing you'd bought all along the downfall. Why? Because as stocks go like this, you would have wished you bought all the way down here, all the way up, because your average would be down here. That's the key. Is it hard to do that? Sure. That's why, guys, I recommend do it automatically. Set it up where you have to transfer any money. It automatically does it for you. Set it up where it automatically buys for you every single month. The less you get involved, the less you look, the less you'll be affected. That's what's important there.
If this thing drops below 5,000,
I was going to ask you. Let's talk about the charts, Mo.
Yeah, I'm just looking at like support levels that we have here. So if it drops below 5,000, you can see on my cursor, we're going to drop to 4,800 pretty quickly. Then it'll get to about 4,700 relatively quickly, and then from there it's just a slow bleed. This is interesting here. From 5,200 down to 4,100. There's not a ton of support built in there, so things can happen fast, especially if we get news that comes out like stuff in Iran, stuff in Israel. That'll drive stuff down very quickly and create new support levels. But man, if this breaks 5,000, it's going to go to 4,700, 4,800 pretty fast, which that's on the S&P, of course. I'm sure the Qs look exactly the same. Let's see here. Qs, if it drops below 413, of course, this is the ETF of it. It'll drop, I don't know, 383, somewhere in there. But of course, tech's going to be more volatile.
So tech, that's the thing, guys. This is something I have to repeat over and over. When you get such a massive run up with a certain sector and it gets to massive overvaluation levels, when the fall happens, you're going to see a bigger drop there. It's short term. June 20th, NVIDIA was 140. NVIDIA was the driving factor for the NASDAQ and S&P for the last year and a half. And now it's at 90. It's down 30%. And my guess is if the NASDAQ fell another 30% from here, NVIDIA would probably be down way more than 30%. Does that mean it's a bad investment? The thing I want you to remember then is if it ends up going, let me go to a crazy number. Let's say it goes to $15. Don't let the 140 to 15 price dictate what you think about the company's fundamentals. You need to be more astute, looking at the company and saying, okay, now it makes sense here. Let me go take a look at this thing. It makes more sense than it did. I love looking at stocks that have fallen a ton as a starting point for looking at investing. Don't let your bias for a company either get you to buy the company or sell the company. Look at me. I'm not touching Tesla stock. I have a Cybertruck. It's on its way. It's supposed to arrive this month. I'm excited to get the Cybertruck, but I'm not buying Tesla stock. Do you see the difference there? That's the big key here. I love NVIDIA chips. Whenever I see NVIDIA chips on my computers, I'm like, okay, great computer. I've been saying that since the 90s. NVIDIA in the late 90s, I was a computer nerd. It was NVIDIA makes the best graphics processors. Don't let your bias for the company and its products affect your outlook on the company's stock price. It's a totally different thing. So if a stock falls a lot, it should be your indication, let me go take a look at it. Now, if you own the stock and it's fallen a lot, it's a lot harder to take a look at it and say, do I want to add more money? 100%. It's a lot harder. But that's when you need to be doing it. That's the whole part about, do you have the stomach to invest? Pretend like you never owned the shares ever. Would you go reevaluate and buy it again? That's the question. Let's say you never owned the shares. At that point, would you be a buyer? That's what's key here. What was that?
That's a good distinction. A lot of people see something they don't own fall 20%, like, oh, sweet, but if they own it,
Exactly.
maybe different.
Exactly.
In reality, it makes a difference.
Exactly. Did you guys hear Dalton, what he said there?
Dalton, just come sit over here.
Why can't we just move the microphone over to him?
There's a short cord. It's right here on the desk. He's
Okay.
right here. Slide to the left as far as you can.
Guys, 2,600 people watching this live stream, the biggest we've ever had. For those out there who want a place of comfort, EM community has all of our tools. And like I said, this community has grown immensely since we started this channel. We've built all these tools, but we have 4 YouTube channels now. We just started a real estate one. I'm not going to tell you guys about it because I only want you to subscribe if you find it because you want to learn about real estate. But we're going to start separating these tools into different packages. So if you want everything that we have here for life, you got to sign up now. Go to everythingmoney.com/sign up. Nick put the link in there. Everythingmoney.com/sign up. We have limited number of spots. This has become more about, I use these tools every single day for my business, for real estate, for stocks, for everything. But it's becoming less about me and more about you as we grow as a company. So you got to go check that out. We will be the place of comfort and calm when things are crazy. I've always said this. I'm not worried at all about what's going on. I want more of it. And guys, I have stocks. I own 18 stocks right now. I have stocks. Not fearful at all. I want you to have that same resolve at night. I want you to be able to go to bed at night getting excited for red days. Ooh, tomorrow I can buy more stocks at better prices. Now, do I think stocks are a screaming deal here? Absolutely not. Absolutely not. We just saw in our stock market GDP ratio, we're at 92.4% overvalued still. Now, we were at 113% before, so it's come down a lot. But the last time we were undervalued was 2012. And look how stocks did, 10% a year for the next 10 years, not including dividends. In the tech bubble, we were as high as 55%. We're at 90-some%. Look what the next 10 years did. -2%, -3%, not including dividends. So you add those back in there, they were almost even. Guys, the more you pay for something, the less your return. The less you pay for something, the more your return. And don't forget, the news follows the stock price. Just a few weeks ago, NVIDIA couldn't miss. Just a few weeks ago, the markets were great. The markets were solid. We wanted rate cuts just to give everybody a break.
Yeah.
What's
Everybody's talking about rate cuts today.
What was that?
Everybody's talking about rate cuts. Even Elon Musk came out and said we need rate cuts. I'm like, oh my God.
Guys, rate cuts are not going to solve our problems.
No. And plus,
overvaluation,
really
not over.
Fed solving your problem?
Yeah.
They're creating a problem. They're just kicking the can.
That's it. It's kicking the can down the road.
Come on.
We gotta have a come to Jesus moment at some point where we sit there and say, okay, what is going on here?
Recessions aren't bad. Down markets aren't bad.
Guys, the best businesses are made during recessions. And for those of you out there, let me do me a favor. Write yes if you work with somebody who's incompetent, who you are clearly smarter than and better than as an employee. Please write yes in there.
I just wrote yes. Not you.
He's not wrong.
Nick said no. Kiss ass.
If you wrote yes, you should want a recession.
Definitely.
Because when your company, especially if it's a smaller business, and they want to pick and choose who they keep on, who are they going to keep on? The lazy piece of shit next to you, or you, the person who gets things done?
It's so true.
You want bad things to happen so that you cream rises to the top.
Yep.
We only know who is naked when the tide recedes.
Everybody, we have all yeses. We have one no, 2 no's. Overwhelming yeses.
Anchor knows. No. Is it me? Yeah, if you think that was funny. It's a whole old adage. If you don't know who the sucker at the table is, you're the sucker.
Yeah, that's great.
That is great. Oh God, I love these days, guys. I get so excited. Like literally this morning I woke up and I saw the markets and I was like, oh, this is so wonderful. I was so excited. Earliest I got in the office in a while today.
We were texting at like 6 a.m. about this.
Yes. Guys, I'm not an early riser. I usually wake up at 7 o'clock. I woke up at 6:45 today to get to the office by 7:45. I was so excited. I was so excited to get the day started. So excited to get the day started.
NASDAQ's down 3.25.
Oh my gosh.
I'm sorry. S&P. Let me look at the Qs. Hold on.
I was going to say.
Oh, that might be. Yeah, 3.5.
The NASDAQ?
Yep.
So guys, things are starting to rebound.
Mm-hmm.
Is it early? Yeah. I mean, we were in the first 30 minutes of trading, but things are already starting to rebound. So look at the volatility here. Look at this volatility. NASDAQ minus 6% pre-market. Now it is minus 3.5%. A 2.5% swing on NASDAQ. What is the total market cap of the NASDAQ, Mo? Can you look that up for me? 2.5% on trillions and trillions and trillions of dollars in a matter of half an hour. You're going to tell me that this is rational? You're going to tell me about efficient market theory? Come on, it doesn't exist. It doesn't work. It's not real. All it is perception. You have to sit there and in order to beat the markets, you have to be able to sit there and see something that other people don't see. Sometimes that doesn't mean that you see something better. Sometimes it just says you sit there and say, this is overvalued, I'm going to avoid it. And it's hard when you see NVIDIA go up 1,000% in a matter of 2 years. You have anything, Mo?
Just pulling it up on the NASDAQ website.
Cancel the stock market. AI not going away. So Daniel makes a good point. AI not going away by NVIDIA. The internet didn't go away. How would you have done if you bought internet stocks back in 2000 as they started to fall? The internet never went away. It got bigger. But 95%, 98% of those companies went to zero. Don't fall in love with the story and say this. That means, how about this? Cars didn't go away. How many car companies have gone under in the last 120 years? Airlines haven't gone away. How many airlines have gone under in the last 120 years? If your pure thesis is, this is a great idea, therefore I should buy companies that are in it, I don't know. And by the way, I don't think NVIDIA is going away, but can it fall drastically? Microsoft didn't go away. In fact, Microsoft grew from 2000 until now, and it only hit its 2000 price 15 years later. It fell 80% and then rebounded along the way. The thesis of things aren't going away, therefore buy it, that just means that any price is a good price. Guys, we can all agree. If you believe that any price for NVIDIA is a good price, we're not the channel for you. You got to find someplace else. Go find one of those other hypesters who probably can go out of business here in the next few years when people realize they're shysters. It's all about finding value. It's possible to overpay for a good thing. It's possible to underpay for a bad thing. Now, my investment thesis is not to buy cigar butts, as Warren Buffett and Ben Graham called it. I do want to find the more Philip Fisher method, Charlie Munger method of buying better companies at great prices. The adage of it's far better to buy a great company at a fair price than a fair company at a great price. I actually don't agree with Warren Buffett when he says that, because he made much better returns on an annualized basis when he bought fair companies at a great price. Now, once you get to a certain point of wealth and you don't want to monitor these things daily, it's far better to buy, but I believe it's possible to buy great companies at a great price. It's just relative. It might be buying Apple at a 12% return versus some random company at a 20% potential return. Would you rather have Apple for the rest of your life at a 12% return, or would you rather have some shit company for 20% return? That's the question you have to ask yourself. Nike is not a great value. That's what Nick says.
Oh.
Why? By the way, I don't think Nike is a great value. I think it's a good value. I think he's right on that one.
It's not dirt cheap.
It's not obviously dirt cheap to me, but I still like it. I'm still accumulating.
Dalton, is Schwab still down?
Yeah, I just checked again. I can't get in.
Dang, that's what a lot of people are saying. Yeah, and Vanguard I'm seeing.
But is Robinhood really down, or is that Robinhood really up, or is that a joke?
I don't know. Interactive Broker's not working. I don't have Robinhood. You have Robinhood, Nick?
I have Robinhood and Schwab.
Check it out.
Listen, I'm glad it was other people too. Yeah, so guys, everybody's getting, like, our data provider is slowing down here.
RIP.
RIP. The stock market is officially dead, even though it's up for the year. Guys, I mean, let's think about this for a second.
The Qs are down 2.7%.
Shut the F up.
Yep.
So Intel, Chris Santos, great question. Intel, it is a turnaround play. I've been saying that for a while. It's not for the faint of heart. I personally believe that the upside is worth the estimate.
Okay, Robinhood's working.
Robinhood's working. Wow, Robinhood's gonna. If Robinhood's smart, they're gonna. Oh, look at this. Atcore hit my price target. Target hit my price target. Beautiful.
Please stop spamming about TSM.
Block them.
What's wrong with you?
Okay, so let's look at Stock Analyzer for Intel. So here's what I'm saying with Intel. If you believe Intel is going to grow its revenue from here. And I did 10-year analysis at only 2, 4, and 6%. Profit margin, I did 18, 22, and 26. Let's take it lower. Let's actually go this. Let's go 0, 2, 4%, 14, 18, 22% for profit margin and free cash flow margin. PE of 12, 15, and 18. And a 9% return. What's it worth today? Low price of 20, high price of 52, middle price of 33. You got to ask yourself, and I put it in a poll. I put it in a poll the other day. Let me show you guys my poll that I did on Twitter, which you guys better be following me on Twitter. Here's my poll I did on Twitter about Intel. I go, what do you think is more likely to happen? Intel at 5 or Intel at 50? Most people think Intel at 50. I don't know. Maybe. But at $5, what are they factoring in? It's a $90 billion market cap company today. So what's that making it at $5? That would make it it's an $83 billion market cap company today. It's tough. I just think it's a big turnaround play. And I would put, if you want to invest in it, it's not something that you do that kid who inherited like 900 grand from his grandmother, put 700,000 in Intel and has now fallen 33%. Mm-hmm. That might be a tough play.
For those of you in Schwab, Mark P said if you were logged into Schwab pre-market, you'll be good. When the market opened, it won't allow new logins.
You know what I'm thankful for today, Paul?
What was that?
You know what I'm thankful for today?
What's that?
Good balance sheets. Because when
Yeah.
prices fall like this, as long
So
as you
we
have
reiterate
confidence-
good balance sheets all the time. What I mean by that is companies that have little debt and companies that are their cash flow is able to easily pay off their debt very quickly, have great liquidity. Like the Googles of the world, the Metas of the world, the Microsofts of the world. These are companies that when times get tough and their recessions, they're going to last. You know, Walgreens. Walgreens is a company I invested in, exited because I realized the balance sheet was absolute shit. And I was like, okay, that's not what I want in my portfolio anymore. And I got rid of it because that balance sheet got a little scary for me. Good balance sheets are what companies that last recessions, that survive recessions go through. There'll always be downtimes. There will be downtimes at some point. Finally got into IBKR, Paul Zwag said.
Mm-hmm.
Well, and the other thing is too, it's like a lot of these companies, you know, they have certain metrics they want to hit for, you know, free cash flow to debt. And it's like, yeah, in recessions, it does pull back a little bit, but it's going to be far less than for companies that are well capitalized.
Absolutely. And guess what? You better believe if a bank banks don't care about relationships. If they want to call that debt for any sort of small caveat, they absolutely will. If anybody in this live stream thinks that banks care about you as a person, one born every minute. There's a sucker born every minute. The number of people I saw lose it in 2008 and 2009 because the bank that told them they were going to have their back during tough times called their loans for the smallest thing, even though they were making payments. Unbelievable. Unbelievable. So is this, what are we at with the NASDAQ live right now?
Let me go back. It seems like I'm getting my data from TradingView. Seems like it's moving. 3.22% down.
The NASDAQ?
Yeah.
2% down?
3.22.
Oh.
And 2.95 on the S&P. Now 3% on the S&P.
Interesting. All right. All right. I mean, listen, this is what we live for. This is exciting stuff. And this is where money is made, is when you're able to buy when stocks are falling. That's when money is made. Right, Mo?
Mm-hmm. Yeah.
When you're able to make money because everybody else is fearful, that's when you're going to make money. Right. That doesn't take brain power. That takes stomach.
Yeah, it takes emotion.
That takes emotion.
Emotional control.
Yeah, that's it. That's absolutely it.
The funniest part is, you know, people who see only 3.6% of whatever it is on the Q's down. It's like, oh, that's not so bad. It's like, that's still a huge fall on index worth trillions.
Yeah.
But just in contrast to 7%, they're like, oh, it's not so bad.
That's not bad. Feels better than this morning.
Do we know? I mean, what did the Nikkei end up down 12.5? By the way, for everybody to realize this, the Nikkei index, just 12%. Well, I think it's probably closed now. In 1989, it hit like 39,800 or something. I don't know what the exact number is. It did not hit that high again until 2024. 35 years. My brother was born in June of 89. This happened in December of 89. My brother didn't see a new high on the Nikkei until he was 35 years old, was married, had 3 kids, and graduated law school. Think about that.
It's
Why?
Like
Because of
31,000.
overvaluation. What was that?
It's at like 31,000.
And now it's at 31,000. It hit a high of like 42.5 or something. Unbelievable.
31,458.
Valuation, guys. Valuation. Valuation. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. As cliche as these statements are, I repeat these statements to myself every day because it's important for me to understand that these are all temporary. Even if we start some major crash suddenly, let's say we have a major crash. Let's say stocks go down 50% in the next 6 months. It's temporary. Let's say it goes down 70% in the next 6 months. It's temporary. It'll eventually come back. Look at the NASDAQ in the 2000, 2001.
Yeah, buy good businesses.
Buy good businesses at good prices. And if they become cheaper, which they will, then you buy more of them.
Right.
And it's hard to do that when it's not. Look at Microsoft. 2000 to 2014 or 15, it went nowhere. In that time, it got to the point where people said it was dead because it was $11 or $12 a share.
Right.
That's incredible. These are the things that have to be understood. We're going to be the people who are sitting there. If the NASDAQ fell, guys, if the NASDAQ fell 60% tomorrow, if I told you right now, if I asked all these financial hype maniacs on YouTube, do you want stocks to fall 60%? They would say, absolutely. I guarantee there's one who would actually genuinely be excited. That's me. And I truly, truly believe that. Truly, truly believe. I know that because I've been there. I've been the guy who everybody said in 2008 and 2009, you're the only good phone call we have with investors. Great. I was buying toxic real estate assets. I was buying stocks every single day, getting excited. That's a fact. That's an absolute fact. It's hard to do that. For some reason, I was blessed with the gene to be able to do that. When I understood things more, actually, that's when it happened. Because I used to get scared. Back in the dot-com crash, I was scared. I was like, oh my God, stocks are going to zero, et cetera, et cetera. But over time, I realized, okay, if I understood why stocks go up and down in the long run, I'll be able to manage it. And I was able to manage it.
I can't get my mind around this comment from Goolsby. We will fix it.
Can you go find out what he really meant by that?
Sure. Does it really matter? Email
Great
him.
comment.
Email
Great
him.
comment from G Moore. Love this. Greed is good? Question mark. No, false fear is good. I love it. Great comment. Thank you very much for saying that. Fear could be real. It could be justifiable, or it could be based on something that isn't realistic. That's what fear tends to be, not understanding. When we don't understand something, we fear it. When we don't understand why stocks could be down 60 or 70%, you fear it. I don't fear it anymore because I understand why stocks go down 60 or 70%. That's where I want you to get. That's why the community was made. I want when these days happen. And Mo, did you go in the community this morning? Were you able to get into it? Unbelievable. I loved it so much seeing people just comment after comment. This is awesome. This is what we wait for. These are the days we want. We love red days. And these are people who have a lot of money invested. They're not people sitting on the sidelines.
Right. Ready for Goolsby?
Yeah.
Fed's job is very straightforward. Maximize employment, stabilize prices, and maintain financial stability. That's what we are going to do. We're looking forward about it. So if the conditions collectively start coming in like that through the line, there's a deterioration in any of those parts, we are going to fix it.
I don't disagree with that. I don't disagree with that. I think you're trying to take it as something else, Mo.
I don't like the Fed.
Okay, great. Congratulations.
I mean, look what they've been doing.
What he said though is accurate. If there's a destabilization in prices, if unemployment, their job is to those are their mandates. Those are their mandates.
But does destabilization in prices mean that whatever stocks
inflation
do, we're going to fix
No,
it?
inflation. I
hope not.
It's inflation.
I hope so.
Well, that's what their mandate is for. It's to keep prices reasonable. What are you guys doing over there?
I was just showing there's an outlet.
Oh, yeah, you were.
Like, the outlet's right here.
Oh God. I don't disagree with him on that one. It also helps that I'm trying to get him on the show, right?
That's true.
Fear is a tool of big players. Yeah.
Well, the world is coming to an end soon. Okay.
Okay, MP, I was wrong for way, way long. Okay, maybe I could. You're right. Yeah, it looks like I'm wrong right now. So what happens if NASDAQ fell 60%? Would I be wrong anymore? No, because you know why? I would be wrong according to you guys, because you, MP, be like, well, we didn't see this happening. As I've said 1,000 times, a room filled with gasoline, we don't know what spark is going to cause the explosion. Do I regret not being in the markets all this time? Yes, because the reason I was wrong, though, is not because of where the market is today. It's because of where fundamentals drove the market's value. That's why I was wrong. So I was wrong, but not for the reasons you think. Just because stocks go up doesn't mean I'm wrong. The reason why I was wrong is fundamentals got better than what I thought they would get. Yes, I own that 100%. And guess what? That's also why I tell people don't mimic my investing. I have businesses. I have 1,000 apartments. I've got lots of businesses upstairs. I can afford to be wrong. I can afford to sit in cash making 5.25% the rest of my life, and I will still be a billionaire. You need to factor that in when you listen to me, because that's why I'm trying to teach that process, because the way I invest is not going to be the same as you and should not be the same as you. I don't dollar cost average for a reason. I don't need to. I can pick the points that make sense to me. Do I regret that now? Yeah, but it took literally the most overpriced market in history for me to sit there and look wrong like that. Okay, I'm fine with that.
Schwab is back on, apparently.
Are they? Okay.
Robinhood has suspended trading for 24 hours.
What? Uh-oh.
Hold on a second.
Luckily, Nick is a long-term investor. What's Alibaba doing right now, by the way? What is it doing? Do we want to say it on this show, or would that bother you?
No, I really don't know.
My guess is it's down huge because of Nikkei. Oh, fudge! Let's go.
It's a normal thing.
Alibaba's only down 2.5%. Why? Because probably everybody who hates Baba is out of Baba already. So what else can it go
It's a
down?
normal Monday for. I think that's a good point though. Is like valuation. It's like they're starting from such a low point. They're probably not going to fall quite as hard as the other markets will.
Yeah, but remember, it's also because who still owns Baba today? Yeah, exactly. The people of us who believe in it, who doesn't own Baba, everybody who hates it. So what more selling pressure? Listen, there's still going to be selling pressure. But you have to weed out all the people who don't want it. Wow, I'm actually surprised. What are you laughing about?
What Nick just said.
What did Nick say?
Can't say it on the air.
Did he say it in the chat?
No, he just said it out. He under his breath. Is this thing real about?
I don't see anything about Robinhood.
I am. I'm seeing it right here on investing.com. Trade platform bar chart said on its social media that it is suspended its 24-hour trading
I follow
service.
bar
What does
charts.
that mean? Like
It's 24. No, it's 24-hour trading service.
What does that mean?
Like they allow people to trade outside of market hours.
Oh, okay. Whoever said that, you got to be a little more specific. Because Nick just said it works. What's happening with GameStop? That's a great question. Let's see what GameStop is doing right now. I wouldn't be surprised.
Can't stop, won't stop, GameStop.
It's only down 5.5%.
Let's go. Is NVIDIA back over 100? It is. It's exactly 100 on the nose. Now it's down below 100.
Let's see what the others are doing, the other big ones.
Guys, I repeat till I'm blue in the face. We have no idea what's going to happen in the short run. All I'm willing to say is I think the next 5 or 10 years are not going to be as good for investors as people have felt based on the last 5 or 10 years, based on valuation. Are there situations that could cause it to be wrong? Absolutely. But what situations would that take? If you understand that, then all you realize when you invest is you're making some sort of educated bet. You're making a bet on future cash flows. We don't know what the future is unknown, and we're human and make mistakes. So we don't know what's going to happen in that future. The question you have to ask yourself is, if you had 30 or 40 of these exact situations, how would they turn out? That's the big thing on investing. That's why I like diversification, but with a process. I don't mean just blind diversification. Although I believe dollar cost averaging and low cost ETFs is blind diversification, and it works because the market is what our threshold is our ruler. We look at the S&P 500. And it's been proven time and time again that when you look at investors getting in and out of the market, they tend to massively underperform the market. Not just a little bit, a lot. Because when things get scary, when prices are lower, people bail. When prices are higher, people invest. This is a fact of life. Fact of life.
Oh. Let's go look at the Fed Watch tool.
Oh, yeah.
It's going to be 1,000% right.
So the CME group, Fed Watch tool, the other day they were talking about, I did it in a video the other day about how they were at like 60% chance of a quarter rate hike when before it was like, what are you seeing now?
It's saying that there's going to be a 50 basis point cut, 92.5% for September.
Look how it changed. So at the bottom, you see at the bottom, Mo, when it does like 1 day ago, 1 week ago, 1 month ago?
Oh, yeah. 1 day ago was 74% that we were going to be at a 50-point basis.
What about a week ago?
A week ago was 11.4. A month ago was 5.5. And today we're 92.5.
Guys, in a month, we went from a 5.5% chance, according to the markets, of a 50-point base rate cut to now a 92% chance of it.
So rates at the end of the year are expected to be 4 to 4.25.
That's a percent, 1.25% lower than it's today. So maybe everybody's saying 6 or 7 rate cuts is going to happen
maybe
now.
So. Maybe you guys are going to be right in the end. And I knew this is what you meant. I knew this is what you meant all at once.
It's incredible.
You just didn't specify. Oh,
that's funny.
That's incredible.
That's incredible. I'm actually surprised how the NASDAQ, like it almost feels like the NASDAQ's up right now, doesn't it?
Yeah. What is it,
3.4?
Yeah.
S&P is down 2.8. The Dow is no longer down triple digits.
Well, Apple is at its high of the day right now, down 4.2%. It was down 10 at one point, basically. Wow. Percent. NVIDIA, let's see. NVIDIA is near the high of the day at $100.40. The high of today is $102.37. Okay. So everything seems to be kind of back.
Who knows what happens, guys?
What happened to the wars?
What was that?
What happened to the wars?
I mean, yeah, it's kind of it's kind of incredible, guys. It's kind of incredible.
Yeah.
Guys, I'm going to urge you guys again, great time to go check out our community and our software. Like I said, these are all the tools we're making. Because of our 4 channels, we're going to be splitting the software up into different pieces soon. So if you want all of it, 100% of it forever, you got to sign up now, everythingmoney.com/sign up. Go there. We're limiting the number of daily spots, so make sure you go there. Guys, it's been a great live stream. I appreciate your time. And hang on a second. 4 o'clock on the Everything Money 24/7 channel. Make sure you pay attention. We will do a daily, we're going to do a recap at the end of the day. We do 4 or 5 videos a week recapping the markets. Guys, we're also going to talk about Palantir at the end of the day. We will talk to you then. Thank you for your time.